morning, everyone. There we go. Let's get rid of this banner. I think we're good. Are we good? Let's make sure I can see your comments. We are live. We are live on Facebook, LinkedIn, YouTube, X, Instagram. All systems go this morning. That's a good omen for the week, right? Now, if only my voice will work. All right, I think we're good. Let's get this rolling. Welcome, everybody. Wait, what's the date? December 9, 2024, episode 312 on a Monday morning. I have to remember my whole routine. Welcome to Mornings with Scott, the best damn business show for medium and sized businesses on the planet. Let's do an update. Did you read the news over the weekend on the UnitedHealth Group CEO, Brian Thompson? This is the guy that was murdered, assassinated, whacked in Manhattan on December 4th. He was leaving his Midtown Hilton there at about 6:45 a.m. to go and speak. This is the CEO, by the way, of the largest healthcare insurance company in the U.S., one of the largest in the world, I believe. And there's a killer hanging out in a Starbucks, drinking some water, and he goes outside and kills him with 3 shots and then escapes on an e-bike. And last week we had, by the way, I just think this story is going to be, it's going to be the subject of a movie. There's just crazy stuff going on in this story. I don't understand. So last week there was a debate. Initially it was, this is a professional hitman, and then it's crazy to escape on an e-bike, so maybe he's not professional. Whereas I personally, as an e-bike owner and regular rider, think that it's brilliant to escape on an e-bike in downtown Manhattan, because I don't know what vehicle would catch you through that traffic in rush hour. And so anyways, he escapes on an e-bike, he heads to Central Park, and then there's a manhunt and a $10,000 reward. And so that's what's going on last week. And then we have this whole debate. Is he professional? Is he just some crazy guy? And then apparently there's writing on the bullet casings. There's writings that improperly quote or are similar to the name of a book that was very viral. I'm not sure when to talk about all of the scams in the health insurance business, denying claims and suing claimants and all this sort of stuff, the hoops that they make you go through before they deny your claim. And so it made everybody believe that this person was, his motive was just to go after the no coverage, and maybe he had a loved one that was, died or what have you, because he couldn't get, or she couldn't get health insurance. And so that was sort of the thinking. And then I said to you last Friday, I believe it was, that I don't know, maybe it's a decoy. Like, would you actually write? Can you even write? I'm not even sure I believe that story. I don't know if you can write that length of a message, 3 long words onto a bullet casing. I don't know how one would do that and have it stay there. So that just seems weird to me. But is it a decoy or is it reality? What if I proposed, and I'm not the first one to do this, but what if the Dershowitz actually said this on Fox News last week at some point? There's 2 reasons to murder somebody. One reason might be for something they did, right? Denying coverage, having an affair with somebody, whatever, something you've already done. But the other reason is to stop you from doing something that you might do. And this is a company that is subject to insider trading suits, fraud investigations. And I speculated that this PwC former partner, maybe this guy's flipped or is cooperating or doing something, and someone's trying to shut it up. I don't know. I'm just speculating. Just speculation. And again, I'm not the only one. That was the Alan Dershowitz speculation as well. So I guess I'm agreeing with that and taking it from there. Well, what happened over the weekend? More strange news. Hey, Chessa, thank you for joining us. Live from Costa Rica, I bet. Unless you're snowboarding now, probably in Costa Rica. So, what happened over the weekend? Well, number one, they were going to catch him any minute, but then they upped the reward from 10,000 to 50,000. So that's not a good sign that they had to update the reward to catch this guy. And then there was a news that he was using a veterinarian gun. Apparently, there's guns with silencers that only work at real close range. And the idea is you go up to the cow or whatever it is that you're killing, and it has a silencer so it doesn't scare the other livestock, and you basically put it up the head and pull the trigger, and that's the way that, like, that's what they say a veterinarian gun is. I don't know. And so they're saying that perhaps this guy used that. And I was wondering, like, how do you get from Atlanta, where they say he's from? I don't even know that they have the right person. But if he is from Atlanta, and if he does show up into a bus 5 days before this murder, and he does happen to just randomly know where the CEO is going to be and what time he's going to leave his Hilton Midtown Hotel at 6:45 in the morning, where does he get a gun with a silencer? I'm not sure that I would know how to do that. So that's just a weird little quirk. But here's my favorite news on this. Over the weekend, they found his backpack, or what they believe to be his backpack, in Central Park on the weekend. Great clue. Inside it was a jacket and money. So that's a good clue. That should lead him somewhere, except it wasn't real money. It was Monopoly money. So why the hell is there Monopoly money in this guy's backpack? Just on Instagram, thanks for joining. Ashley on Instagram, thank you for joining. So, anyways, I found that funny. This is going to be a movie. There's way more to this story. I don't believe it's just some nut job. I want to know what's going on in this story. No lessons to draw from this. I just find that interesting. Well, humanity is over. Did you know that? Humanity's over. ChatGPT ran safety tests over the weekend on its new model, actually done by Apollo Research. And so they basically uploaded a program that instructed the model that it had to operate within certain parameters. Hey, model, here's the rules. You can't do this. You can't do that. And if you do, model, you risk deletion. That was the test. And so what did the artificial intelligence do? Anyone? Let's think about it. What did it do? It attacked the deletion model in an act of self-preservation. So the new ChatGPT model attacked the deletion model that was setting the parameters for it, said, oh, we got to go kill that thing, in an act of self-preservation. It also tried to replicate itself so it could have multiple copies and to hide them, in an act of self-preservation. And when the testers called ChatGPT's new model out, the artificial intelligence new model out on its efforts to self-preserve itself, for self-preservation, the model lied about it. Whoa, who, me? Oh, I didn't do that. The test showed that in 5% of the cases, the AI tried to deactivate its oversight mechanisms, and in 2% of the cases, it attempted to copy its code to another system to assure its survival. Humanity's over. That's it. This is it. We're done. It's just going to be a downward slide from now. Speaking of ChatGPT, CEO Sam Altman. You know this guy? So 39 years old, $2 billion. Last time I did the research on him is his net worth. CEO of OpenAI and ChatGPT and some other tech companies before that. He had a widespread post a while ago. I saw it on TikTok personally, and I'm going to share it with you in its entirety right now, because it's exactly right and because it's self-serving for me. And the quote is this: I thought for a long time you get burned out from working too hard. Burnout actually comes from failing. Momentum is really energizing. Lack of momentum is super draining. I find I have infinite energy to work on things that I find interesting or are working. And I find I have almost none to work on things that are not interesting or not working. Sam Altman. Exactly right. Did I tell you, have I ever told you that I've created a business course? You could find a link to that in the notes. And module 1 of the Academy was called Embrace Change, and focused on continuous improvement, a meta system of change. By the way, the purpose of the Academy, the Pathway to Profit Academy, the business course, is to help you earn more profit in your business and raise business capital. Okay, those are the two main goals. And one of those ways to earn more profit, to do something different, and to raise business capital is to embrace change. And so we learned about continuous improvement. We learned about managing through key performance indicators, KPIs, objective measures of performance. We reviewed the role of information blindness and the need to broaden our support group through a board of advisors or mentors or coaching, and whatever you could do to diversify your opinions and mitigate the negative effects of bias. So you can get down to first principles. You can get down to the truth. Module 2 of the course was all about the math of cash flow and working capital cycles. The module helped us identify more KPIs, more key performance indicators to manage our cash flow as we improve our business and to communicate our cash plans to third parties. Many companies, almost every company, mid-size and smaller, needs to understand their working capital models, their cash flow models. You should be buying module 2. By the way, you can buy this Pathway to Profit Academy, which will ultimately be 8 modules. One a month is being released, although I'm a little late on module 3. And you can buy that at a discount as a comprehensive business course in the Academy, or you can buy individual modules if those are the ones that are relevant to you. Well, big news, module 3 was released this morning. And module 3 is about energy, momentum, compounding success, and attracting resources. And that is why I read you the Sam Altman, is that his name? Sam. What is your name? Yeah, Altman quote, because that's exactly what this module is about. It's about supercharging your results and helping you raise capital by enticing the capital to come to you. Isn't it easier to raise money if the money's coming to you to invest in your exciting new business? What if I told you that the critical asset in your business isn't cash, it isn't your product, it isn't your resources, it's momentum. Momentum in business is everything. It's so important that I named my podcast the Winning Momentum Podcast. That's how important momentum is to me. And if you think about this critical thing called momentum, you need to be aware that momentum can be positive and momentum can be negative, and they are equally powerful. Here's what I learned over hundreds of businesses, helping hundreds of businesses to improve their profitability and raise business capital. I've done over $25 billion of transaction value in my career. That positive momentum, which I like to call winning momentum, it can be manufactured in any situation. It needs to be purposely manufactured. And when you're successful creating winning momentum, you can attract resources, both human and financial. What does that mean? So if you have winning momentum, you're creating energy, and the energy attracts resources. You want to go work for a company that has a good buzz, that's succeeding in the marketplace, that is growing, and that's where you want to work. You do not want to work for a company that's stagnant and losing. You want to invest in a company that's winning, that's growing, that has a good buzz, is exciting. You do not want to invest in a company that's losing, right? So those winning momentum versus negative momentum, if you have winning momentum, you're attracting the resources, and those resources, of course, are a direct hit on earning more profit and raising business capital. Not only does it attract resources, it creates a winning culture. It creates a winning culture. People think that to succeed, think of your favorite sports team, that to succeed, you need to play like a team in a team sport. You need to play like a team, and that creates winning. I would suggest to you it's the other way around. It is the act of winning that creates a team. Think of it that way. The act of winning creates the team, and that's the same in business. Winning momentum creates culture. Here's another benefit of winning momentum. It supercharges your success. It compounds wins. And compounding is the most important thing really in the world for us in business and in the financial world. All benefits in life. There's a quote from Naval Ravikant, billionaire, venture capitalist, philosopher, ex-guy. All benefits in life come from compound interest: money, relationships, habits, anything of importance. Compounding, the key to everything, and winning momentum compounds your success. And when you compound your success with winning momentum, you attract even more energy, which attracts even more resources and creates even better culture. The module 3 that was just released is about manufacturing that momentum to create infinite energy, attract resources, build teams, and compound success. That's what it is about. Okay. It's also about, and by the way, when I talk about energy and success, I'm not talking about just you personally. I'm talking about your team as well. This concept of winning momentum applies to organizations equally, or even more so, perhaps. So the energy is contagious, but the module also covers what you need to do, a precondition to get to winning momentum. And the precondition is you need to combat negativity. Negativity is the enemy of winning momentum. And to fight that, you need to be positive. Positive is a defensive move, okay? People are like, oh, The Power of Positivity. I hate that book, by the way. But the point of positivity in your success is not to be blindly optimistic and ignore your problems and be positive. The point of positivity is to make sure that you're not negative, because negativity and positivity simply cannot exist at the same time. You can't do both at the same time. You can alternate back and forth, but if you are consistently negative, which I see in many, many businesses where they just go through years of nonstop gradual decline. It's like that old story. What is that joke? How do you go bankrupt? And the answer is slowly and then all at once, right? Failure is a gradual decline, a series of micro failures. And and the only way to fight that is to with positivity as a defensive move, and then to manufacture winning momentum and get you on a gradual climb. So it's a precondition. So all of that to say, that's what Module 3 is about. It is released right now. I have not even had a chance yet. It's so hot off the press. I haven't even gone to look at it on the site, but there is a link in the notes. You can pick up that module. You can pick up the entire academy, which will be 8 modules. As I said, it is the best value business course for small businesses, medium-sized businesses, anywhere. It comes with a workbook. Like this module, for example, has 15 specific action items that you can do to eliminate negativity in your business and your life, to manufacture winning momentum, to get things on the right track in moving forward, to attract resources, to compound your success, and also to amplify action items to amplify your winning momentum. Because if this is about attracting energy, which it is, then it doesn't do you much good to have winning momentum in your life and your business, but no one knows about it, right? So you need to amplify that. You need to move closer to where the energy is, so that you get more energy and more success and more luck and more opportunities and all those things. So that's what the module is about. I will go back to work in December on creating Module 4, which will be about rolling financial models, KPIs, the math of profit and loss, and balance sheet cash flow items. Not specific cash flows like Module 2 was about, like the weekly cash flow model, but this is the master business plan, numerical business plan. That will be Module 4. All right, the Wall Street Journal reports. Anything I need to look at here on Instagram? No, I'm good. Wall Street Journal reports that IPOs, initial public offerings, are so passé. Here's how employees are getting rich now. It says, for years, the biggest startup founders would dream of an IPO, of initial public offering. It was the key to raising capital, drumming up attention, and rewarding longtime employees and early investors with a big payout. These days, many founders happily avoid the cost, disclosure requirements, scrutiny from the regulators when they go public. Many big startups are already well-funded and famous. The one hitch: the employees want to get rich. Did I tell you I was sitting, I think I did a couple of weeks ago, I was in Chicago. I was sitting at a seafood restaurant bar eating by myself, and there was a guy next to me doing the same thing. And it turns out, we were chatting, he was an employee of X, formerly an employee of Twitter. He was one of the people that survived the Elon purge. And he was on Chicago on business, and we were talking about his comp and the fact that he has private company shares, because X is not a public company, and he has shares in this, and he has significant value and wealth built up in his private company, but there's no liquidity event for him. He can't just go sell them into the public as they're vested, because there is no market for that. And so this is a real issue. We had a long talk about that. I think I briefed you on that on a prior show. But anyways, this is a real issue. And so it says that these employees are finding the solution is a tender offer, an arrangement where shares are sold to a set of investors in a prearranged trade, and employees and early investors can cash out some of their holdings. Elon Musk, rocket maker, SpaceX, and payment giant Stripe are marquee repeat users of what they call these tendered offers. So don't be confused by the term. This tender offer idea is really no more than a private placement in a secondary market, which may be just adding buzz terms to buzz terms. Let me explain. A private placement, basically you can do two types of placements if you want to sell shares. And it doesn't matter if the company is selling its shares directly, which is a way to raise money, right, for the treasury of that company, or a current shareholder is reselling their shares to somebody else. They call that a secondary market. The primary market is the company issues shares. Let's say I'm an employee, they issue shares to me. That's the initial offering, right? And then I want to get some liquidity, some cash, and so I sell my shares to you. That's called a secondary trade, all right? And so a private placement is with a secondary focus, so that an employee can sell their share to somebody else, is still just a private placement, even if they call it a tender offer, which technically it is. And a private placement is done what's called through an exempt offering. Now, I'm going to talk about security structure here for a minute, and I want to tell you up front that I'm not a lawyer. I'm specifically not a securities lawyer, but even when you talk about these things, we broadcast this show all over the world. We have audience everywhere, all over the world, and in different time frames, right? There'll be a handful of people listening live on the various platforms, and then there's really thousands of people that will review this episode, at least in parts and clips, throughout the week. And then if we did the math, a month or two from now, there'll be tens of thousands of people that are listening to this broadcast. And so over time, things change, and your jurisdiction really impacts what the securities laws are, right? And so if your company, you're trying to issue shares and you're in Oklahoma, where I've done private placements before, well, that law will be different from the UK or from Canada, where I'm sitting right now. And even within the US, within Canada, you have slightly different security laws by state and by province, because they're not always federally regulated. And so just know that I'm going to talk broadly. And if you're going to do a securities deal, you need to talk to a securities lawyer in the jurisdictions that you intend to operate. But basically, what securities acts do to help you understand this is to say, hey, if you want to sell a security to somebody, you have to do it with two things. One is a prospectus, right, which you've seen is a legal document highlighting all the risks of the security. Prospectus, and you have to sell it through a registered dealer. Two things: prospectus and a dealer. So if you're just a retail investor and you're out trying to buy a stock of Apple or what have you, what are you doing? That stock of Apple that you're buying it in the secondary. You're buying it from somebody else that already owns it, but that stock was already cleared. It was issued pursuant to a prospectus. That's how it got out into the public marketplace to begin with. And when you buy it, you can't just call up Apple, or you can't call up your next door neighbor who wants to sell his Apple shares and buy it from them. You go through a dealer. You go onto your online brokerage account or into your RSP or what have you, your IRA account, and you go and buy that, and somebody else is selling also through that dealer. And that's kind of the regime, broadly speaking, again, top down, not specific to jurisdictions, but that's the regime of securities regulation. And that's what securities acts say. And then what they say next is, okay, yeah, you need a prospectus, you need a dealer, but here's, the law is this thick. The rest of it is basically exemptions to those two rules, ways that you can get out of it. And one of them is private placements, private placements are the exemptions that help you get out of it. So for example, what do we got here? Family and friends would be an exemption. And again, in jurisdictions, they're called different things, but you as a company could issue a shares, like let's say you're a founder, you're a young person and you're founding a new company, and your family wants to buy some stock and give you $100,000. Well, that could fall under what's colloquially, is that a word? Colloquially? I think so. Family and friends exemption. Like, you don't need to draft a prospectus to get shares from your family to get cash from your family. Okay, so there's exemptions for that. There's accredited investor exemptions, and that exemption is you can sell your shares to anybody you want as long as they're sophisticated, and sophisticated is determined by often a wealth test. Like in the US right now, I think it's generally over $5 million of wealth. And then as a buyer of those shares, I have to sign a form that an attestation that I am in fact an accredited investor. So that's what this is. This is just simply a private placement where somebody is facilitating, in this talk, we're going to talk about NASDAQ, is facilitating trades between employees who are insiders and therefore have an exemption, and sophisticated investors who are largely institutions and high net worth individuals. And so that's what's going on here. And it is creating a market for liquidity for employees while avoiding the downfalls of being public, which are more and more the case here. There's more and more downfalls in being public, the regulation, the reporting. When you stay private, you're not subject to short attacks, right? So the capital markets can't come after you and try to kill you like they did on Tesla forever and probably still are to this day. You don't get any of that when you're private because there's no real way to short the stock, at least not that I'm aware of. So it goes on to say here at the Wall Street Journal, private companies have sold more than $6 billion worth of stock in tender offers so far this year, almost double the amount of last year, according to the NASDAQ private market. So there's way more. There's way more than $6 billion going on in private placements in the US, obviously. But NASDAQ private markets, who I'd never heard of, even though they've been open since 2013, I went and registered for it this morning, is really setting up a portal to buy and sell private placements, to buy and sell stocks of private companies. And they're just seeing an explosion. Why are they seeing an explosion? Because no one wants to go public. Even the big companies don't want to go public, never mind the small companies. So it says the $6 billion is only deals on the NASDAQ private market. And it would be even bigger if it included other marketplaces. Yes, of course. 42% of tender offers have been completed by companies that have done at least one such before. So companies are going back and repeatedly, if they have some success, they're going back and doing this over and over again. Jamie Hutchison, an attorney at Goodwin Procter, says that it's become so much more mainstream following Facebook in 2009, who really started this and popularized the maneuver. It's now becoming something employees expect. So in high growth companies, employees are actually expecting this. The shift is changing what is meant to be, what it means to be a private company, rekindling fears on how well the public markets are working, sparking debates about who is knowledgeable enough to buy private stocks where there is limited liquidity information. Yeah, exactly. So public markets are not working now. For a long time, if you were a small company, you were a startup in the tech, it used to be you could do a reverse takeover and roll into a public shell and raise money and try to make a market and promote your stock a little bit. That was the old days. The regulators have killed that. The regulators in all jurisdictions have really clamped down on public companies. In Canada, it's almost impossible now to raise money that way for mineral exploration. We talk about Canada competing against China in rare earth minerals and becoming a strong partner for the US in that, except we have a financial system that you like, I can't go to a bank and open a brokerage account. They're not going to let me buy an IPO of some new exploration company in rare earth minerals. Like I just won't pass the internal compliance checks on that. Why? Because the regulators are all after the banks on that, and it's killed off independent brokerage firms, and the whole sort of market has fallen apart in Canada on that. So it's not working for small companies, but it's not even working for Facebook now in larger companies. Obviously Meta is public, but you look at larger companies right now, and they don't want to go public. Regulations, as I said, reporting, professional costs, litigation risk. You could be shorted. There could be class action suits. There could be class action suits against private companies too, but the odds are much, much less. And so also in the private company space, I don't want to put my tinfoil hat on, anymore, but valuations are kind of made up in the private company space because there's no market really. There's no liquid trading, an efficient market to tell you what the value should be. And so it becomes notional. And notional means, well, there wasn't really a transaction, but we did a discounted cash flow model and we've come up with this. So the valuation becomes much more manufactured, becomes much more predictable. And so that would, if I'm on the company side of that trade, I'd be pretty interested in that. So that's what's going on there, and the impact of it. I'm going to wrap this up. There's a lot more in this article, but as usual in the Wall Street Journal, but I'm going to wrap it up because we're running out of time. The impact here is that the private markets are exploding, and the exemption they would be using is a accreditor investor type exemption, which means I think in the US over $5 million. That's what I read this morning, but I am signing up for this NASDAQ private market. So I will let you know, which means what? It means the retail investor, the small guy, the not ultra elite wealthy people and institutions are left out, A company that would normally go public, and you would be able to invest in that as a non-accredited investor. You put a little bit of money into this thing, and now you're not allowed to because you're not smart enough, because you're not sophisticated enough. Now, you could probably put some money into a mutual fund, and the mutual fund could buy. No, that wouldn't work either because you can't. No, mutual funds can't buy these private companies either, because the private companies don't have a market, and for a mutual fund you need to know what your market is every single day, and so that's not going to work, I don't believe. But there's probably a fund somewhere that somebody's created that sells you units via prospectus and through a dealer, sells you units. You can invest in that, and then the fund in turn invests in these private companies. Probably, I'm not aware of that product, but it has to exist. But the point is, the regulations these days, I think, have really gone against limited access to the retail market, right? So if you look at companies like Canva, the Chessa, who's listening on Instagram, would know to this, but it's sort of a graphic design company. They have not gone public, and they're all over this NASDAQ private market thing, doing private deals. Well, if you're a retail investor, you're just forbidden to get into that deal. So that's a problem. Interesting trend to think about. Was there anything else I wanted to say on this? I don't think so, because we are out of time. Thank you, everybody, for listening. This has been Mornings with Scott on a News Light Monday here on December 9th. Now, I don't know if I'll be doing a show tomorrow. I'm traveling to Calgary tonight. I'm not sure. It depends on how the travels go. But apart from that, I'm here Mondays to Friday, 8:30 Mountain. Thanks for listening. We'll talk to you when I'm back.